It's time for McDonald's to report its earnings. That will be tomorrow morning. So let's get some details. Our expert panel is here with us. Paul Schatz, President, Chief Investment Officer, Heritage Capital, and Ryan Patel, Global Business Executive. Thank you both for being with us. Paul, start with you. When we look at McDonald's, what are your thoughts right off the bat for what we could expect tomorrow?
Well, certainly they've recovered. Look at their U.S. business is almost back to being normalized again. Think about it, everyone's going to the drive-through now. So that is a huge plus for McDonald's. They've got a rock solid fortress balance sheet. They can withstand most things thrown at them. But that drive-through component of their business is huge. Although breakfast clearly has not recovered and isn't going to recover because folks aren't really going to work. But the challenge on the other side, let's think about it. International, they don't have that drive-through culture. That's where I think McDonald's has the big challenge, the big struggle, the big question mark. But clearly they've done everything right here. International, especially Mexico and in that area of the world, it's going to be tough.
So, Ryan, what do you think? I know you were looking at international specifically versus domestic. You were also looking at the comps. Ryan, what are your thoughts?
Yeah, first off, it's not going to be pretty when the earnings come out. They're going to be down revenue by 31%, more than likely around $3.75 billion. They were seeing an uptick in June when it was improving. So I think that's a great thing. I think international, I agree. I think international will be a little bit different. I actually think it's tied to Europe and other places. I think they'll recover a little bit faster. I think they're spending a lot on the technology side. They've always been forward thinkers. So I think the delivery model there will really help. But also if you look at what McDonald's is going to try to do, they're in a great position in a couple ways, right? I mean, yes, they're there. Yes, they're competitive. I think burgers too, pizza has been the winner. Burgers are always been kind of a preferred kind of second place. And I think it's going to happen. And I think their valuation has increased, but also think about the product offering moving forward to the rest of the year. It's in the cheaper category where, you can be able to create that frequency furthermore. So I think what they need to do, especially internationally, they've really kind of in March, if you look at, they've really aided their franchisees. They put themselves in position to be successful. The question now becomes, what's thrown a hiccup, which will be interesting to see in the numbers tomorrow, is how bad was the beginning of July when things starting to shut down here in the U.S. a little bit when they're recovering.
Right. And Paul, we have to wait and see for those numbers to see how bad it really was. You have a little less faith in the international numbers. That being said, you do think that the stock can trickle higher for McDonald's, and also Wendy's is a name that's been on your radar. That, Paul, you like that even more than McDonald's?
So that's right. I do trickle higher, I think, for sure. I think the stock could certainly go to 210 to 220 without a lot of trouble. Historically, that's a year's worth of a decent return. But as Ryan said, look, pizza's in favor over burgers. That's clearly been a problem. But in a weaker economy, people are going to flow down towards the cheapest product, which is McDonald's. The problem is I think we're just starting to see some food inflation creep in. And I think once that starts, it'll be really slow. But it will be a headwind for McDonald's. I do like Wendy's better. It's a stock I've mentioned here time and time again. I love it. It's certainly more domestic. Wendy's seems to just do their business a little bit better. I've always been a little more comfortable with Wendy's, with their measured approach. And when they go into something like pre-pandemic breakfast, they went all in and they just kept dotting the I's, crossing T's, and being successful. So if you said to me, would I bet more on the Wendy's management team over the McDonald's management team? Absolutely. But I think both stocks can rise over the next couple of months for sure.
I understand. All right. And Ryan, where would you put your money? What's your bet?
Well, I definitely believe in the Wendy's leadership. I think McDonald's for me has always been, they've always been there. If you think about if there was a pluses and you had to break down McDonald's, they've increased their valuation. Their PE's multiples went 27.6. Their average over the last 3 years in the PE multiples went 22.2. If you compare it to the peers, you would kind of think it's at a discount, with Starbucks being around 32.7 and even Wendy's being at 37.2. And with the dividend that's around analyzed payout $5 per share, you feel like, McDonald's is going to make a run when it gets better. I think it just, they're there. Wendy's is great. I think that whole sector, when you talk about fast food, the strong will survive. Don't be surprised. Like I said, I really love that McDonald's had put technology, invested in this a lot earlier. Don't be surprised that they roll out more innovative things in the future to take advantage of their positioning and their locations.
Yeah, and Paul, final thought, the dividend is always a good part of things, right?
It is. I mean, neither Wendy's nor McDonald's would be considered strong dividend payers. And I would be a little surprised in this environment if either company raised a dividend. But certainly for portfolios that either mandate that companies pay dividends, both stocks will check off a lot of boxes.
Mm-hmm. Good to see you both. Thank you so much. Paul Schatz, President, Chief Investment Officer, Heritage Capital. Ryan Patel, Global Business Executive. Thank you both so very much.